Hello all, good evening. So welcome to today's market analysis. So as we can see here, today's market was negative in the sense that Nifty has closed 1% down. Bank Nifty is also down 1%, and the VIX is up by 2.7%. And if you look at the broader market, it was the heavyweights which were under pressure today, because relatively, if you see, small cap was just down 0.8%, right? 0.88%. Small caps were down. Mid cap was just 0.3% down. Mid cap select, Nifty mid cap select, in fact, was flat. You can see here. So mainly it was the heavyweights actually, since Nifty and Bank Nifty both are down 1%, and we know that HDFC Bank being a biggest contributor to the index, almost 14% in Nifty and 25% in Bank Nifty. So it is down 4%, which is a big contributor to today's fall. So mainly it is HDFC Bank, and also one more heavyweight is the Reliance Industries, which being a large heavyweight contributing to the downside today. So as I mentioned in the thumbnail, it was a weak open. So first, let me explain what a weak open generally is. So when you look at the price, price has four components. In fact, price has the components as per whatever chart you see, right? For example, when I say, if you're seeing a line chart, so if you're seeing a line chart, you're just seeing the closing price. So when you see the closing price, your whatever analysis you do should be based only on the closing price. But if I'm seeing a candlestick chart, so candlestick chart has four components in it. So one is the open, second is the close, right? And then two extremes, that is high and low. So candlestick chart in a way is better because it reveals four information about the prices: open, low, high, and close. But it is not better if you don't know how to use all the other components, because in market less is more. A line chart gives only close. If you know how to use close, then there's nothing better than it, right? So more is good only when you know how to utilize the extra other components of the price. So in that context, I think I've discussed a certain concept related to open already, right? For example, in open, there is a famous or traditional concept called open is equal to high and open is equal to low. So open is equal to high gives a bearish bias to the instrument, and open is equal to low gives a kind of bullish bias to the instrument. Again, it is a very contextual thing. It depends on where. So just the price by itself being open is equal to low and open is equal to high doesn't mean anything. It gives the initial bias at the opening itself, at 9:15 itself. It gives a particular bias. Then depends on the context where the chart is located, price is located, contextual to the other levels. You have to derive the understanding. Now, another simple concept related to open is something called strong open and weak open. So, in the thumbnail, I've mentioned, that today's market is a weak open. So, what is meant by weak open is, again, it's a simple, if today's opening price is, if it is very, very, less than the previous day's, closing price. Generally, closing price is taken as the standard. So, for example, if you see, this is the closing price of the previous day, right? So price opened somewhere here. So it's a generally a gap situation, which is like this. Generally, what happens? It can also be a gap down, inside the previous day range. So that is not called a weak open. For instance, if the previous day's range is something like this, right? Assume that this is day one, and if the price opens somewhere here, I will not call this a weak open, because one, the opening is of course below the previous day closing, but still there is a previous day low level. I mean, considering that this is the low, okay. So just think that this is the lower level. So if the price, this is not a weak open. So today's open is, I hope the understanding is really clear, that if the opening price is less than the previous day's closing price, so this, or previous day low price, it depends on the relative context of the chart, right? So if you see in this context, we have the previous day low somewhere here, previous day close, both are nearby, so it doesn't make a difference in this case. So it's very contextual. Whatever concept we discuss on the price, it's very contextual depending on the chart. So open when it is very low compared to the previous day close or previous day low, this is called a weak opening. So this is a technical simple price based understanding of open. So from the open we come to conclusion that yes, today is a weak open. That's what the simple understanding. And a strong open is something like the opposite condition, right? The strong open simply means that the opening is very greater than the previous day closing or the reverse previous day high. So if that happens, that is a strong open. So just keep this term in mind. So since I mentioned in today's thumbnail that it was a weak open. So weak open gives a negative bias to the mind. First thing, it doesn't mean that you go and short at the open. That's not the purpose. But weak open gives a bias to the mind, right? So that's the whole of it. So just like open is equal to high gives a bias, open is equal to low gives a bias. So weak open also gives a strong bias. So moving on. So then the market, just trended. I mean, at least Nifty, gave a good sell on rise structure. Beautifully, one could have traded this based on price action, and it took a rejection somewhere at this level, and it became flat, for the last second half. So that was a Nifty for you. And let me clear this. And if you look at the simple price based swings here, right? So why the price stops here, or if you just analyze the reason, it is very much evident that I was expecting rather Nifty to, when it was making this low structure, the next level from the standard price levels was the previous week low level of 19,892. Although it did not hit this level today, but there are high chances if this low is taken out, because we saw a rejection from here, but there was no follow. So since this rejection was not having any follow, if this is broken, there are high chances that it may come to these levels pretty. And coming to Bank Nifty, again, Bank Nifty also was characterized by a weak open. I discussed the concept. Along with that, you can see that this is the swing point. Like this swing point was much evident in Bank Nifty, although it was not so visible in Nifty. That's why both the indices have to be seen together. So this swing point where the price almost has taken support, you can see first it gave a breakout of this level, right? So it, at first level it broke out of the same level, then it gave a closing below that, so this became a fake breakout kind of setup, and then the next day it gaps up, right? It is gapping up above the previous day's closing, this thing. So it's a positive thing, and it consolidates and breaks out. So and then this breakout was retested, right? And then the price goes up again, it comes back again for retesting. So it took support here almost thrice. So it's almost like a breakout, a retest, and a couple of confirmations. So today price ultimately took a support here. So during intraday, I mean, how can one come to a conclusion that this might be a low? Is maybe one method is simple price rejection and follow up. For example, when the price hits this low, it immediately bounces and there is a follow-up green candle. So this price behavior is confirming that yes, there is bias, or this zone is acting as a demand zone for the price. So just like how the price got rejected here and there is a follow-up selling, so this is a supply zone. Similarly, the same concept on the other side, there's rejection of the price and it has to be the lowest point of the price. And generally, rejection doesn't work at random levels. It works at some predefined levels like previous day high, low, whatever the standard levels are there, and such swing lows, because swing lows and swing highs are supply and demand zones, right? So it is just the concept like this. So confirming that okay, fine, the price may not fall further. And one more important thing was I was expecting the price to somewhere reverse at 500 level, because it was a psychological point, but price respected the swing in much better way, right? Because first immediately took support from this when it was falling in the first half at 12 o'clock, it took support around this zone. So, but anyway, the swing was very clear. So it was very nearby also. The price ultimately took support from the same 44, 455 odd zones, right? So that's how price clearly respected the chart. Uh, Although both psychological levels and charts were very close by, so it hinted that yes, there is some demand zone at this particular place. So this was about Nifty and Bank Nifty, and as we discussed, it was the HDFC Bank which was very weak today. You can see that it is open is equal to high with a big gap down. So there's a and the price continues to trend. So it was a pretty huge contribution from HDFC Bank and Reliance to raise fall. And let's have a quick look at Reliance also. So Reliance also opened with the gap down, and the first candle was pretty bearish. This is what I'm trying to tell, that when the price hits a low point and if it bounces fiercely, so this is a rejection point. So this remains a crucial reference point for the intraday, right? So if till this point is not breached significantly, one must not short this instrument. So that's what this rejection clearly means. So anyway, that's about Reliance and HDFC Bank. But IT was flat. TCS, Infi, both were flat, and it was Axis Bank, in fact, which was very strong. So that's it about overall today's market. When you look at the Nifty and Bank Nifty, they were very weak. And today being an event day, so the Fed FOMC meeting, right? The Fed FOMC meeting is scheduled today, and we could see good reaction again throughout the day with dollar index also. So let us see how the FOMC event and the interest rate decision comes about, and ultimately let the price react and unfold the story. So hope this analysis was helpful. Thank you.